I'm Holli McCray, and I'm the co-founder of Home Marketing Group Real Estate Brokerage in Knoxville, Tennessee. And today, we are downtown learning how to make your money make more money. So buckle up, because we've got Harper Jones in the house, and he is the founder of Life with Leverage to tell you exactly how to do just that. Stay tuned. Harper Jones.
Yeah, Mom, I'll call you back. Hey, Holly, how are you?
Hey, I am so happy to have you on the show today. I'm so excited to talk about this. What is infinite banking?
Well, Holly, thanks for having me here today. And I really love talking to you in general, but especially about this concept because I'm passionate about it. Now, when we're thinking about infinite banking, we got to think about our money flowing in and out of our checking accounts and our savings accounts, because that's banking in general. Now, when money's flowing in and out of our accounts, we're like, hey, we really want to put that money to work. We want it to earn interest and grow for us, but we don't have a lot of control over that when it's going in and out of someone else's bank.
Right.
So, infinite banking, what is that? That's about shifting our cash, our savings, into something called a life insurance contract with a mutual insurance company, a whole life policy. And what that enables us to do is have our money go to work with one of these insurance companies on our behalf, and we're going to get a lot of different benefits and attributes, characteristics along with that insurance company and policy, and we're able to access our cash or capital within that policy.
So what I'm hearing you say is typically we're going to put our money in an account. We really don't have a lot of control over it. Does this investment vehicle allow us to maybe hold our money more accountable to make more money and have more control over it?
Yes, exactly. So when money is in a checking or savings account, it's very easily accessible, which is awesome.
Sure.
But sometimes it finds its way out. We might spend it more. We might make a little bit more of a poor investment and not think about where our money's going to flow. If we're shifting it to one of these policies, it's more like a holding tank, or a way where you can warehouse your wealth before deploying it out to other investments. And when it's sitting in there, you're going to have growth on those dollars in the form of it being tax-free. It's compounding uninterrupted for you. It's going to be very creditor protected, and you're going to have a nice death benefit.
How easy is it to get out?
Essentially, as you're shifting money into a checking or savings account, we're going to do the same thing with these life insurance contracts over time. And you're going to have something in the policy called cash value, or cash, which is like your equity within the policy. There's two parts. You have a death benefit in the policy, and you have cash value.
Okay.
The cash value is what we can actually access, and we can either withdraw it, but our preferred method is to actually leverage against it, because when you're leveraging against an asset or your cash, it's working in two places instead of one.
And when you take money out, you're not taking your money out necessarily. You can, but that's not necessarily what we're talking about. You are borrowing against the money that you have in this policy, correct? So your money stays in the policy and continues to grow?
Yes, that's exactly correct, Holly. So you're able to put your money to work and then still use that capital in the form of what's called a line of credit, in the insurance world called a policy loan. When your money's in the policy, just like if it was in a savings account at a bank, it's working for you some, but if you borrow against it, the bank's gonna really make the rules with lines of credit. They could call it on you. They're gonna choose what the interest rate is and how much loan to value you can get. With an insurance contract, you have contractual rights that are unilateral to you, where you could leverage up to 100% loan to value of your cash in there and not worry about it going down in value, because you have guarantees that are baked into the contract.
If I go to the bank to get a loan on a house, I'm looking at 6.5% to 7%. Are you saying that if I had enough money in this policy, I could borrow against it to buy a house or a car or fund a wedding or college or anything at 4% interest today?
That's exactly correct.
So we're talking 4-point-something% versus 6-point-something%?
Yeah, on average, it's about 5% right now in the insurance industry.
Wow. Oh my gosh. It's like, psh, why isn't everybody doing this? Why didn't I do this sooner, Harper?
Sure. And I think that a lot of people are starting to do it. It's become a concept that's gaining in popularity, but it really comes down to it's unconventional, and at the end of the day, you need the right education, the right coach to teach you about it and see if it's a good fit for you and if it makes sense for your goal.
I love this. This really is the ideal savings vehicle. well, there you have it. We have a lot of great information today from Harper Jones. And I don't know about you, but I am totally ready to learn how to use this strategy to make my money make more money. And if you want to do the same, visit lifewithleverage.com. I'm Holli McCray, and until next time, go out and live your American dream.